Hey folks, Dan Frio here with your closing bell for May 12th, 2025. So today we saw mortgage rates go up. Well, we saw the Dow Jones and all the equity markets go up as well. So what actually happened today? Well, over the weekend, we had some great progress on the China trade with the tariffs. That's basically what's catapulting all this. But the one piece of the puzzle I missed a little bit is I thought the tariff revenue that came in last month for $16 billion in tariff money, it's helping the deficit, but I thought it would help mortgage rates a little bit more. So a little bit confused. Let's go over and see what happened today and my thoughts on the markets. So my name is Dan Frio. I do this report actually 2 times a day to inform you guys of what's going on with these things over here. And the reason I do this is I want you to understand the whys behind it. Okay, so in today's market, we saw mortgage rates inch up a little bit. There was a big gap in bonds, but the news is right through here. Our government went over and kind of made some agreements with China over the weekend, and the news is fantastic. Okay, there's a pause on some tariffs. There is a minimum tariff put into place, and there's future negotiations coming. So now the door's open, and now that's meaning there's a little bit of relief on the horizon. So that's what we're seeing right through here. So that's what caused basically the equity markets to go up 1,000 points. But then when we come over here, I'm like, okay, this tariff revenue is really going to help. And you can see in April, tariff revenue brought in $16 billion. Okay, that's going to go straight toward the deficit. So you're thinking, okay, the lower the deficit that we're going to have, that means less bonds in the market, and that should be a good news for interest rates. Well, what's happening right now most likely are people just pulling their money out of everything and just jumping into the stock market. Even the president told us last week, buy stocks. And when he's kind of dangling that carrot out there, I'm going to kind of take advantage of that in the short term, see how things go, and then take it from there. But based on this information, we really didn't have any economic news coming in today. You can see right here. Here's our economic calendar. Now, tomorrow's a different story. We're going to start getting inflation numbers. Tomorrow, we're getting consumer inflation. Thursday, we're getting producer inflation. But here's what happened in the bond market today. MBSs were down 39 ticks. And look at this gap. My hope or my concerns are we going to fill in this gap, which we do a lot of times? So this is the bond market that we look at. This is basically a mortgage bond. This is what we focus in on when we're trying to figure out what is going on with mortgage rates. What you have to understand is how to read this chart. Here's how you read it. As this chart goes up, okay, that means the price of a bond is going up, not the rates. Okay, how this works is as prices go up, rates or yields come down. There's an inverse. There's like a yin-yang effect here. What normally happens though, here's the gap that we had over the weekend. This was our closing through Friday, and then here's where we opened today. This is bad news when it comes to interest rates. So the normal pattern that you normally see is there'll be an uptick, and it usually brings in or fills in this gap. Well, we were on our way there, and a couple banks started repricing, and then we kind of petered out from there. So what tomorrow's going to bring? Well, it's going to be a catalyst of right through here. What is the inflation numbers going to tell us? And then that's going to basically explain what the Federal Reserve is going to do. Well, the Federal Reserve is still on the sidelines saying, okay, we're still going to wait for these numbers to come in and a little more clarity on where this tariff stuff takes us. But as the clarity comes in, my expectations are the stock market's going to continue to rally. But as the bond market gets used to kind of what's going on in the background, meaning more and more tariff money coming in and less national debt, that should actually bring down yields over the mid to long term. Now, short term, you got those bond vigilantes out there that are taking major advantage of this. So when you're working with us, what I'm trying to do is lock before we go on the weekends. This weekend, though, it was my bad, I guess, is my thought going into the weekend is going to be good news, and thus we'd see the stock market go up, and we also see the bond market starting to relax, because just 3-4 weeks ago we had bonds under a 4% yield. Today we're about a 4.3 to 4.4. So I was waiting for that to kind of come out of the system, but it doesn't look like it's coming out. So we're going to get more and more inflationary data this week, with the consumer inflation numbers coming in tomorrow, producer inflation numbers coming in on Thursday. That'll kind of set the tone for the week, because that's major numbers coming in right now. But I do want to show you a little caption right through here. We did have one Fed official talking today. I did look her up to see, is she a dove? Is she a hawk? What's her thoughts? So I'm going to play a little clip up here. I won't play the whole thing. Just the thoughts on the one Fed official that came out today and actually spoke. What'd she have to say?
Steve Leisman has the very latest. Hi, Steve.
Hey, Kelly, thanks. Yeah, futures market quickly priced out a summer Fed rate cut after the U.S. deal with China for a 90-day pause from the most extreme tariffs. Markets pushed ahead the first cut to the fall, now see just 2 cuts this year. Meanwhile, comments from a Fed governor suggest the economy, at least in her opinion, is not completely out of the tariff woods just yet. So the probability of the first cut coming in July has fallen to 42% from 69% on Friday. September now priced with an 82% probability of that first cut. A second cut now in October, just barely priced in, maybe a little bit towards the 60% weight, with more confidence in December. And the third cut in December is now priced out. Markets.
This is just between what I want you guys to understand is if you read the data over there, this is where the orange is where we were Friday before the China thing, and then it diverted to this. So in October, chances of a rate cut, they're 71%. Now they're under 58%. So you can see all the way over there in July, there was about a 70% chance of a rate cut. Now it's under 50%. So there's a lot of good news, and I thought a lot of this would transpire over into lower rates, but that's actually the data that we're seeing right now. I'll let Steve continue with some of this information. It's pretty informative.
Bet that the Fed would meet the stagflation threat by ignoring inflation and addressing the weaker growth side. The Fed last week threw some cold water on that, saying risks to both higher inflation and unemployment had increased. Well, the risks to both would now seem to be lower, though they have not yet disappeared. Adriana Kugler, Fed governor, said in an event this morning that even at current tariff levels, the economic effects will remain significant from the tariffs. There could be some permanent tariff inflation effects that she's concerned about, but hard to judge the pace of U.S. economic growth because of the impact of front-running of tariffs and the decline in expectations. Policy, she says right now, however, is well-positioned to deal with either eventuality. Despite the agreement, some tariff-related price increases will still hit the economy. 30% tariffs on China, still pretty high, and uncertainty now extends 90 days out. But clearly, recession odds have declined. They're lower now, and it would seem the possibility, this could be key, of lower tariffs on other trading partners have increased. Kelly?
Do you have a feeling, Steve, of how all this now is shaking out in terms of, as we hear from Fed officials and so forth, is it a coast is clear kind of signal for the economy, or are people still mired in confusion and concern about, what exactly is going to happen on the tariff and trade front?
I think it's more the latter, but
I'll answer that. It's pretty simple. We still don't know really anything. Tariffs on China last week, were they 240? Were they 140? Now are they 30? They're going to go down to 10. We still don't have a lot of clarity. At least the dialogue is going, and China is the biggest trading partner out there. So that's the catalyst behind all this. So it's a pretty simple conversation. That was she teed that one up, but that's what's going on. We're going to continue to monitor things, and that's why you have these big moves in the markets each day. So that's what we're seeing right through there. I do want to give you a public service announcement before you go anywhere. If you're watching this video, you're probably in the market to either buy or refinance a home. Before you do that, before you call anybody, here's what I need you to do. These are called trigger leads. So when you call a bank, it could be me or any other bank, when they pull your mortgage credit report, what happens is the credit agencies now have the ability or the authorization at that point to sell your data off to banks and brokers or whoever wants that. Those are called trigger leads. If you want to stop those, just go to optoutprescreen.com. I didn't create this site. Actually, the entities did. You can sign up to that. It's kind of like the do not call list. So if you don't want your financial data sold, please check that out before you go any further. But my name is Dan Frio. Like I said, what I do here is I'm actually a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. I actually work at a federal bank. So yes, I work at a federal bank and I am a mortgage loan officer. Here's the cool thing. We have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, I work at a federal bank, but the unique thing about this is the bank had the fortitude to actually say, okay, when borrowers call in, what are they looking for? They want to make sure they can get the product. But one of the biggest things they want to make sure is they're getting a competitive rate, and they're working with someone that they know what they're doing. But again, they want that competitive rate. Well, our theory is if we set ourselves up with more banks, we can help you with all these. So we set ourselves up with 33 other banks and lenders. So when you put in your application rate through here, we're shopping your rate and program with not just my bank, with all 34 of them when you add them all together. So why not check out our website, therateupdate.com, where, again, our slogan is one application, one credit pool. We're going to shop your loan over 30 different lenders. You can put in your application right above my head. You want to schedule a consultation, you can do that right through there. Our 800 number is up there. We have over 3,000 videos on our YouTube channel. We hand-selected these right down through here to help, a lot of people out. If you're a homeowner right now and you want to, figure out when is the best time to refinance, how do you track rates? Check out this one right through here. We're working on that right now. This one is 101 home buying. So if you're new to home buying, you want to figure out how this whole process works, check out there. FHA guidelines updates are right through here. Credit repair and help there, VA benefits, and more videos than you can find right through here. So we'd love to help you if you're out there anywhere in the country needing some assistance, either looking to buy or refinance your home. Love to be able to help you out. God bless. Have a fantastic evening. See you back here tomorrow morning. See how all this mess starts another day. Take care, folks. See you then. Bye-bye.